Thank you, Rajni, so much for the kind introduction and for giving the housekeeping rules. Let me introduce myself. I am Sandeep Gupta, CFA. I have co-founded a company called Beehive Investec, which is an alternate investment fund leveraging technology for alternate investments. And now I would move on to the main session and introduce Arvind Mathur. So Arvind is a pioneer of private equity and venture capital in the Asia Pacific region. While at the Asian Development Bank, he has helped bring major institutional investors to Asia, including the likes of CalPERS, CDPQ, AMP, and several American and Japanese insurance companies in private equity fund structures. As the president of the Indian Venture Capital Association, he promoted best practices and reforms in private equity and venture capital. Arvind has had the good fortune of rubbing shoulders with leaders like KKR, Sequoia, HDFC Property, TVS, Capital Bearings, and many other funds to promote best practices in private equity, buyouts, and venture capital. As a member of SEBI, Narayan led Committee on Alternate Investment Funds, along with KKR, TPG, Carlyle, and others, he has helped produce 3 reports for submission to the Ministry of Finance. Arvind has mentored startup entrepreneurs under Goldman Sachs program and has over 25 years of global experience in private equity venture capital. He has led a team of multinational professionals in managing a portfolio of direct investments and over 30 private equity and venture capital funds at the Asian Development Bank. He has engineered several exits. At Citi, he has helped structure a $1 billion private equity fund. So his experience is very large and spans all stages of private equity, including due diligence, valuation, fund formation, mobilizing LP commitments, making drawdowns, identifying and negotiating investments, adding value to funds and portfolio companies by exiting in a variety of methods, including strategic sales, sales to other LPs, IPOs, and other funds. His investment banking role included M&A and IPOs at Citi and ADB. He is an FRM and a CFA charter holder and has attended executive education in private equity and hedge funds at the Harvard Business School, training at Cambridge, Mass, in New York at Goldman Sachs and Citi, and in the US SEC in Washington, DC. So come abroad, the journey. I'm sure it's going to be a very interesting session. And over to you, Arvind, now.
Thank you so much, Sandeep. It's very kind of you to introduce me. And thank you so much to the CFA Society India, everybody who's been kind enough to organize this and who's coordinated with me. Thank you, everybody. And welcome to all the participants in this webinar, rather this meeting. I'm delighted to meet you here. I was informed that this is an event about careers, prospects for CFA charter holders and aspiring charter holders. That's what it's all about. And I'd like to start by saying that all of you have a fantastic future. All of you, I think, are very young. You're probably in your 20s and your 30s and your 40s. I don't know if anybody's in his 50s, but for all of you, I would say there's a fantastic future ahead. I've worked for, you can see my gray hair. I've worked for 40 years already. So I'm not going to see the next 40, but you are going to see the next 40 years. So there's a great future ahead. I have prepared a presentation and I will switch that on now, Sandeep.
Absolutely, sir.
So the host has to let me share the meeting so that I can upload. Vidhi or whoever is the organizer here, can you please give me the...
We're just getting that done.
Yes. So while that is being done, I would like to take this time. I've got a few slides, but before that can happen, I'll continue talking right now. So we're going to talk today about careers in investment banking and private equity. Although we sort of narrowed it down to these two areas, actually it's a very broad area. All the capital markets, whether it is the listed securities market, whether it's the private equity market, whether it is the investment banking market, whether it is insurance companies, all of them are okay. So it's already been uploaded for me. Thank you so much. But I'd just like to say one thing. I'm really talking about, can you go to the second slide, sir? Yes. So although if you see this slide, we've got all these separate sort of circles: private equity, investment banking, pension funds, mutual funds, multilaterals. I could even put the listed stock market there, the Bombay Stock Exchange, NSE. I could put everything there. But I just want to let you know that these are all interconnected. It's not as though private equity works in a vacuum and investment banking works in Mars, pension funds work on Earth. No, they're all interconnected, and you have to, and you will understand, maybe some of you already know this, these interconnections. So although my talk to you is going to be about private equity and investment banking, I will have to touch upon some of the other areas as well of the financial markets, or rather the capital markets. Somebody has written, sort of drawn some lines on the slides. Please try to remove that. Thank you. Now, so in this slide, I have, if you see the large circle, I have written pension funds, insurance companies. Why? The reason is that pension funds and insurance companies are the largest providers of funds to private equity. Multilaterals like the Asian Development Bank, the IFC, the World Bank, they are providers of funds to private equity. So there's this interconnection. Now, the way I'm going to conduct this brief talk of mine is I'm going to talk a little bit about each of these areas. And then I'm also going to talk about, the careers in them and how you could possibly, how you should be thinking about a career in these fields. So can we go to the next slide, please? Thank you. And the perspective that I'm going to take, although most of the people or most of you are probably sitting in India, this is simply because this event has been organized by CFA Society India, but the perspective that I'm going to present is not only India, but on a global basis. And not only short term, but also the long term. What are the opportunities in the short term, and what are the opportunities in the medium to long term? Next, please. So, who needs CFA charter holders? Investment banks. That's first. I've mentioned it first. Now, why would they need a CFA charter holder? The reason is that some of the skill sets that the CFA charter holders have acquired are needed there. For example, financial analysis. That's a skill set that investment banks need. For example, valuation. Investment banks need that skill of valuation. But just for the simple reason that investment banks do IPOs, you have to have valuation skills. Investment banks organize or help companies undertake mergers and acquisitions. You need valuation skills. In fact, valuation skills are needed everywhere. It's a critical skill. And fortunately, the CFA charter holders are trained in this. The other area is asset managers. Now, asset managers is a very broad area. It includes managing the assets of pension funds, managing the assets of insurance companies. These are huge You open the newspapers nowadays in India and you read, say, Edelweiss has a joint venture with CDPQ, or the Canada Pension Plan has a joint venture with Kotak Investment Managers. These are huge bodies. Now in India, the pension fund industry is large, but it is not yet fully developed. The way and the manner in which investments are done by pension funds in the United States or Europe or Canada, our pension fund industry has not yet developed to that stage. But even in India, the pension funds are large, and it's going to happen very fast. Very fast, the Indian pension fund industry is going to grow. The insurance industry, each insurance company has a chief investment officer. Below him, he has a big team. They invest in private equity. Now in India, you have till about 3 or 4 years ago, insurance companies were hardly investing in private equity, but now insurance companies have begun to invest in private equity. Now, there's just one point about terminology. The word private equity in India under SEBI regulations falls under the category of alternative investment funds. In fact, alternative investment funds are of 3 types. The third type is really what are called hedge funds, but AIF 1, category 1 and AIF category 2, they are either venture capital or private equity. This categorization happened around 2012, although PE and VC funds existed even in the 90s in India. But for example, the insurance companies, they got into investing in alternative investment funds only recently, maybe a year or 2 ago. Not a year or 2, maybe 4 or 5 years ago. The point I'm trying to convey to you is that asset managers, it appears, is mostly mutual funds, right? Managing mutual funds, which is right. That's probably the largest asset class in India that we read about every day. But the insurance portfolio management of insurance companies is also getting larger and larger and larger. And you are going to have career opportunities in those areas as well. Asset management of insurance companies is already there, it's already active. Pension funds is not yet so active, but we're going to get there. Sooner or later, even pension funds there'll be reforms in the pension fund industry, PFRDA. Right now, the pension fund industry, the overarching institution is PFRDA. And a number of reforms are required in PFRDA. Provident funds, all of this is going to grow, and there's going to be opportunity for all of you in these areas. I've even written CFA charter holders are required by regulators. So till about 10 years ago, till about 2008, the SEC in the United States was mostly, populated by lawyers. And as well as, the other regulators in New York, etc., they were mostly populated by lawyers. But then when they saw the financial shenanigans, they started recruiting. They said, my God, we regulators also ought to understand financial shenanigans. So maybe we need to get financial analysts. So the US SEC, the New York, the New York State regulator for securities markets, even they started recruiting financial analysts. What does this mean? Why am I saying this? What this means is that the opportunities for you in our country, India, are going to be more and more and more, because these fields are going to become more and more sophisticated. Not only are they going to become sophisticated, all of these asset classes in India and all over the world, they're going to become bigger and bigger and bigger. It's unimaginable. The size of pension funds, insurance companies, just the sheer size is huge, and it's growing rapidly. Actually, the world is getting wealthier and wealthier and wealthier day by day by day. Yes, there are times when it goes down. Like currently, we have the pandemic. India's GDP and most countries' GDPs have gotten into negative territory. But the long-term trend is there's going to be GDP growth almost constantly for the next 50 years for India. Constant growth. What does this mean? There's going to be so much wealth in the country. There's going to be so much wealth. There's going to be, all this wealth has to be managed. It has to be invested. And those are going to create more and more job opportunities for all of you professionals who are either charter holders of the CFA or are aspiring to be charter holders. Then I've also put in number 4 in this chart or in this slide, even auditors. You know, in the old days, if you went to an EY or if you went to a PwC or a, you know, these kind of audit firms, they would hire CAs mostly, right? But now they've begun to hire CFAs because they realize that the knowledge of the CFA charter holders is relevant in many ways. So I'm going to go now to the next slide because I need to explain to you a little bit more about what is private equity. This is not a training program, by the way, but I'm going to give you a brief idea of what is private equity. And then you will understand that the ecosystem is huge. You can either take a job in an investment bank, you can take a job in a private equity fund, or in the whole ecosystem of these sectors. So, surrounding private equity, there's a huge ecosystem of valuation experts, of audit experts, people who know how to audit or analyze a private equity fund's performance. There's a huge ecosystem around it. People who raise capital for private equity funds, which are called placement agents. Sir, can we move to the next slide, sir? Thank you. So I'm going to go a little bit more deeper into investment banks and what exactly they do. If you look at number 3, I think, the first thing we all get to know is that investment banks do IPOs for companies. Companies, NBFCs, financial institutions, whoever wants to raise funds in the markets, you go to an investment bank. So number 3 in this slide is about fundraising. And I've even mentioned private equity. Now, this is not really well developed yet in India. The IPO market is well developed. Bonds, yes. Today, if an Indian company wants to raise debentures, either listed debentures or privately placed debentures, you can go to an investment bank, and they would, if you qualify, if there's an appetite for your company's bonds or debentures, they'll be able to place it for you. So fundraising. They even raise funds for private equity funds. This part is not so well developed yet, fundraising for private equity funds. Although I do understand that ICICI Securities does that, and a couple of other investment banks do that. But raising funds for private equity, those are not IPO, those are private placements. That's another area. And of course, raising sovereign debt is another area of fundraising. So this is what investment banks do. If that's the first thing that you think of in your minds about the job of an investment banker, is to do fundraising. Then I'd like you to focus on this slide on number 2, mergers and acquisitions. Mergers and acquisitions, one company wants to acquire another company. There's huge activity going on in M&A. Billions of dollars of M&A deals are taking place all the time. And the reason, why do companies merge or acquire? Why does one company acquire another company? There's one word that you must know. It's synergies. 1 + 1 normally equals 2. But in an M&A deal, 1 + 1 ought to equal 4, because you've got synergies. So M&A is a very important activity for investment banks. Here, I'd like to make a small distinction. There are these big boys, the big bulge, you call them, the Goldman Sachs of the world, the Morgan Stanleys of the world, these very large investment banks. Now, does that mean for a small investment bank in Kolkata, there is no business because these big boys are there? Or a small investment bank in Bombay or in Chennai or in Bangalore or Delhi? No. Goldman Sachs is not going to do a deal whose size is less than $1 billion. But that's so nice, because below $1 billion, there are so many other deals. So maybe ICICI's investment bank might want to do deals of maybe $50 million and above. So there's this pecking order. There are small investment banks, there are large, there are investment banks that do small deals, investment banks who do medium-sized deals, and then there are investment banks like Goldman Sachs who do mega, really huge deals. So it's not that, if you're looking for a career in investment banking, that Goldman Sachs is that's it. No, there are lots of opportunities. India has got a lot of domestic investment banks as well. Look at people like Hemant Kothari. Hemant Kothari in the 1980s started off DSP. He did so well. He was just a small, domestic investment banker. But he did extremely well. He got a joint venture with Morgan Stanley. And DSP has produced some of the top investment bankers in India. So you could be with a small investment bank, and that will position you very well for a career that could take you into a bigger investment bank. It could take you into a top tier private equity fund. So one of the key perspectives I'd like to share with you is that you don't have to just think about, look, I've got to get a job with Goldman Sachs or some of the top firms. Of course, if you get it, you should nothing wrong in aspiring for it, and if you get it, super. But that's not the only one. There are lots of other smaller outfits in India which are very professional. People like Edelweiss and others. So equity research is another area. Again, equity research is done by investment banks, and you have an edge. CFA charter holders have an edge. You are taught how to do equity research in your CFA course. But if you go for an interview, you should not only know what is you need to know, you need to have the technical knowledge of equity research, but you also need to know the trends. What are the trends in the world today? And I'd like to emphasize that when you go for an interview, Be aware of what are the trends today in the world. If there's the pandemic, things look so bad, right? Things look so depressed. But what is the trend? Where is big and small money getting invested today, even during the pandemic? Just to give you one simple example, e-commerce is booming. So maybe e-commerce is a good area to invest in. Now, because e-commerce is booming, e-commerce companies need more and more warehouses. So if you are interested in real estate investing, maybe investing in warehouses is a good idea. So trends, there are trends, and there are short-term trends and long-term trends. You must be aware of that when you go for any interview. And the interviewer wants to hear that from you. Now, if you look at number 2, back to 2, SPACs. You must have heard that SPACs, special purpose acquisition companies. Suddenly, this has become very popular. SPACs have been around since 2000, around 2005, 2008. But all of a sudden, in the last 2 years, SPACs have become extremely popular. So you ought to, even though it may not be part of your CFA course, you should take the initiative and learn about it. There are so many webinars, training programs, attend them. So this is one particular slide about investment banks. There's lots of opportunities in this. There are a lot of institutions in this area. Okay, sir, can we go to the next slide? Okay, so I was asked to talk about job opportunities in private equity, which I'm going to, but I do want to say that various markets are interconnected. So let me first focus on private equity. So can we go to the, okay, let's just remain on this slide. Now, a private equity fund is what? It is a pool of capital where investors have pooled their capital, and a particular fund manager, let's say KKR is the fund manager, or in India, Chris Capital, or in India, Multiples, is a fund manager. And investors have pooled their capital and have authorized the fund manager to manage this fund. So if you look at number 7 are foundations and family offices. So in India, you have family offices. If you look at, the Hero family, right? The Hero family is the Munjal family. They're an extremely wealthy family. So they are in India going around investing in private equity funds. Of course, they make other investments too, but they have invested in some VC funds and some private equity funds. It's not the only thing they do. So they have a family office. So they've recruited a few people in their office here in Delhi. And I just mentioned the Munjal family as an example. There are so many families in India who've got their family offices, who've got their family wealth built over the last 10, 20, 30, 40, 50, 100 years of wealth. And this is a huge amount of wealth. They want this wealth to be managed professionally. They want it to be invested in private equity. Maybe they want it to be invested in venture capital. They want to maybe make their own direct investments. Maybe they want to invest in hedge funds. So you've got those opportunities. Find out about these family offices. Find out if there's an opportunity. Slowly, they will get to realize that, look, the CFAs are well qualified for this work. Now, coming to a private equity job. And I'm going to tell you nice things about it, and I'm also going to tell you the limitations. The good thing about private equity is if you open the newspaper today, if you open the newspaper in India since the year 2000, the Economic Times, Business Standard, every day you will see some PE fund has made this investment or that investment has done this exit or that exit, and they made so much money, and a few times, sometimes they've lost money. Day after day, year after year after year after year. This is what you have been reading. Everybody has been reading. And this is exciting. You invest $10 million, you sell it for $50 million, it excites everybody. And you want to go and do that job. Particularly, you're skilled for that. The CFA charter holders are skilled for that. But I do want to warn you that a private equity fund doesn't have huge teams. If you look at, let's say, Bank of Baroda, right? There's no article on Bank of Baroda at any given day. But probably Bank of Baroda has 10,000 employees. The private equity industry, each private equity fund is too much in the limelight. But the job opportunities are very limited. The reason is that they are simply investors. They are investors. They don't actually run a huge bank or anything like that. So the number of jobs in private equity compared to, let's say, in a bank are much less, fewer. You've got to be aware of that. And because they are fewer, there's a lot of competition. And if you want to go in there, you must be ready for this competition. You should equip yourself that a private equity fund would want to hire you compared to 10 other applicants. Please maybe go to the next slide. So I'd just like to mention a few things about private equity. Starting from the bottom, you start with the fund formation, you form the fund. In order to form the fund, you got to make a team. Oh, by the way, you don't even have to always join a fund. You could start your own fund, private equity fund. If you have a uncle or you have your friend who's got, even, a small amount of money, like 30 crores, you can start your own fund. 20 crores, you can start your own fund. And start building a track record. So even though you see a lot of these big names, there are a lot of small, tiny funds around. I think so many people have registered with SEBI under the AIF guidelines. So if the fund is formed, then you get a team of people that work together. The fund usually has a life of 7 to 10 years. You make investments over 4 to 5 years. You do due diligence. You've got to be very careful because you have to make your track record. If your investment returns are not good, you cannot set up your next fund. So you've got to be very careful as to what you're going to invest in, what are the trends, what sectors are likely to be successful, what kind of businesses are likely to be successful, who do you invest in? There are all kinds of people in the world, right? You want to invest in people who have integrity. You do proper, thorough due diligence. Having done that, you monitor the investment. There seems to be a lot of fun in just making the investment. I'm sorry. Even monitoring an investment is very important. What is happening in the company where you've invested $100 million or where you've invested 1 crore? You got to go and monitor. And if there are some problems, you got to find a way to help solve the problem. And the next arrow, which is in red, says value add. A private equity fund is not a financial investment alone. The most important thing about a private equity investment is that you have to help the portfolio company perform better. Now, if the entrepreneur can do it himself, that's what you want. You want the entrepreneur to do it himself. But if there's any which way you can add value, you're supposed to add value. Unlike a mutual fund. In a mutual fund, you buy shares of L&T. Let's say tomorrow you buy 100 crores of shares of 100 crores rupees worth of shares of L&T. You're not going to go call the CEO and say, sir, your engineering department must be run in this manner. A mutual fund investor is a passive investor in the sense that he does not necessarily engage in the operations of the company. Although that may be changing a little bit, they do get involved to the extent of voting in the annual general meeting on resolutions. Yes, they do, but not beyond that. But a private equity fund has to do that. So do you have the skill to be able to add value to a portfolio company? And here I'd just like to say, who are the kind of people who they hire? A private equity fund needs to hire financial analysts. They need to hire people who can add value to the enterprise. These are consultants and MBAs who know how a business runs. Take, for example, the job of the CFO, or just fundraising by a company. How does this company raise funds for, let's say, a particular portfolio company needs to raise 500 crores. How are you going to raise funds? What is the best way to raise 500 crores? So they even need investment bankers in their team. Then you go to the next three green arrows. The company you have to sell the company, right? And the companies typically, these are unlisted companies. They're not listed yet. When you made the investment, it was not listed. You got to exit. How are you going to exit? You might sell the whole company to another company, which is an M&A deal, mass mergers and acquisitions deal. Or you might do an IPO. Who has these skills? Investment bankers. So the private equity funds are going to recruit people with backgrounds in consulting, financial analysis, MBAs, and investment bankers, right? That's the logical thing, right? Given the nature of private equity, that's the sort of people they need to have to be able to do an excellent job. And the same thing applies to venture capital. In the case of venture capital, there's a slight difference. In the case of venture capital, people recruit entrepreneurs. A fund can be started by an entrepreneur. So there are a number of VC funds which have been started not by MBAs or by CAs or by CFAs, but the most important skill is that they have experience of being an entrepreneur and experience of being a successful entrepreneur. They have experience of being a successful startup entrepreneur. So if you have experience, so if you may be a CFA charter holder, but you have gone and worked in a startup, and that startup became successful, or maybe you started your own startup and that startup became successful. Now, if I have 10 crores to give somebody and say, I'll give you 10 crores to invest as venture capital, who will I give it to? If you come to me and says that, Arvind, I've started 3 startups, 1 failed and 2 succeeded, and now I'm starting a VC fund, why don't you give me 10 crores to manage? I'll say yes. But if you just come and say, I've only got this degree, you're not going to get it. You might get it. So it depends on the nature of the business. Venture capital will be looking out for people who have some sort of an entrepreneurial background. Can we go to the next slide, please? So in private equity, I want to show you the full picture. So the fund manager, the blue circle is the fund manager. You know, when you say multiples, when you say KKR, when you say, you know, any of these big funds like Tris Capital, they are called GPs, general partners. And when you say you want to join private equity, most people mean they want to go and join a GP. Then you have LPs. LPs are who? They are the people, they are the institutional investors that give capital to the general partners, the GPs. And these are the pension funds, the insurance companies, family offices, high net worth, ultra high net worth individuals, sovereign wealth funds, you know, Government of Singapore Investment Corporation, the Abu Dhabi investment authorities. You can get a job there. And finally, the portfolio companies. If a private equity fund is, what do private equity funds do? They invest in companies. They are called portcos, portfolio companies. You can get a job in a company and you can raise private equity for them. And then in the bottom, you know, I've given this dotted line where I've said, look, you've got placement agents. Placement agents raise capital for general partners. Consultants have a role in all the three circles. Investment banks, they help GPs raise capital or they help GPs do exits. Valuation skills are needed by everyone. Auditors are needed by everyone. So when you say to me that, or when someone says, I'm looking for a job in the private equity market, I think you should be looking at it at the entire ecosystem rather than only GPs. Because if you look only at GPs, it's a very small market. But when you look at it this way, it's a bigger market for you. And believe me, this market is going to grow and grow and grow and grow. There will be problems. There always are problems, but the trend is that this market is going to grow. Next slide, please. Next slide. Is the last one or there's some more? Yeah. And then, you know, who else plays in this space? Asian Development Bank. They've invested in about 60 funds. When I was there, we invested in 30 funds. IFC probably invested in 400 funds. SIDBI I have not mentioned. SIDBI has invested in 300 funds, private equity and venture capital funds. The World Bank Pension Fund has invested in many funds. The Asian Infrastructure Investment Bank in Beijing, they've invested in funds. New Development Bank in Shanghai, they have. You can get jobs in any of these. Of course, when I say you can get a job, you have to understand what is the kind of person they're looking for. But certainly a CFA charter holder is well respected. I know so many CFA charter holders working in all of these organizations. Can we go to the next slide, please? Wait, for a moment, I want to stop here, Sandeep. And if there are any questions you want to, you know, discuss, I'd be happy to chat and share ideas.
Absolutely. In fact, there are numerous questions that are there, and I'm going to have a challenge covering all of those questions in the time given. So Rajni, please stop me when it's a hard stop, but till that time, we will try to take as much information from Mr. Arvind as possible. So let me jump directly onto the first question. That is a very interesting question from Mayank. So Mayank has asked that, sir, I wanted to ask, what is the way for a CFA level 2 candidate to reach private equity or investment banking? So Mayank, I could answer that very easily for you. First, get your CFA. But just joking, because Dr. Arvind, Mr. Arvind Mathur has already told us that, it's CFA is not the only panacea to getting jobs in IB. So entrepreneurship and other things are also important. So Arvind, that's the question to you. Without a CFA charter, how does one make a career in private equity or investment banking?
Just going back to that point, the gentleman who asked about the level 2. See, it's never too early to start. You can start reading about case studies of private equity. If you have time, attend a course on private equity, on online course. There's never late. It's never early. You can start whenever you want to start. Level 1, level 2. Even before you do your CFA, you can start learning about private equity. You can learn whenever you want. There's so much information available in today's world. I hope that helps. Sandeep, go to the next question, please.
Absolutely. So there are lots of other questions with regards to details about, the fund size, allocation to private equity, and, other technical questions, but you have spent quite a lot of time. It was really nice for us all to get a lot of information about what do investment banks do, and different concepts like SPACs, what are asset managers, what are hedge funds, pension funds, family offices, and endowments. So you've done a lot of information already there. But coming back to this question, so this is a question again by Rahul, which says that, is there a relationship between the fund size and allocation to private equity? Is it that the larger the fund, the greater percentage allocation to alternate investments and private equity?
So thank you for that question. Who allocates to private equity? So we're talking about allocation by pension funds, insurance companies, family offices, and university endowments in America and England to a very small extent. These are the boys, and sovereign wealth funds. These are the boys that allocate assets to different asset classes, including private equity. So how much is allocated? If that is the question, the allocation varies from 1% to 100%. What do I mean by that? There are insurance companies in the world who will allocate, or from zero, maybe let's start with zero. There are some companies, insurance companies in the world, or a pension fund, they may have zero exposure to private equity till today. Some have learned about private equity and their exposure could be 5% to 10% of their total assets, maybe 5% of their total assets in private equity, only that much. Then you go into, let's say, the Yale endowment. The Yale endowment is an endowment of the Yale University, which is about a $50 billion endowment. They are one of the largest allocators to private equity and venture capital. Their allocation is about close to 20%. So the range is usually between 0 to 20% allocation. 20 is on the very high side. Now, if you look at Abu Dhabi Investment Authority, ADIA. ADIA is, I went to ADIA, I met them and spoke to some people there, and they said that they are investing huge amounts in private equity. I wouldn't say 100%, but yes, their allocation to private equity is huge. So the sovereign wealth funds tend to have a large allocation. Large allocation means what? It could be 20%, it could be 40%. That's what it means. So I hope that answers your question.
Absolutely.
What's the next
question? And now coming back to the next question from Krishna Call. This is also a very relevant question. Is a CA and CFA a good combination as a requisite to get into marquee IBP roles, or is an MBA indispensable?
See, I'll give you my view. The more knowledge you have, the more skills you have, the better it is. So you got CFA, very good. You got CA, an Indian CA is one of the best CAs in the world. I'm not a CA, but I have so much admiration for Indian CAs. So if it's CFA, CA combination, very nice. If you do your MBA, why not? Absolutely. As I said, the MBA folks know, or at least they are taught how to run a business. And in how to run a business, for example, a private equity fund, they invest in companies. And their job is to add value, right? So they must understand how a business runs. So the MBAs have an edge. With one small distinction I would like to make is that, see, the way the world goes by degrees, right? You have to face it. But if you have already worked for 10 years in a Citibank, or you have worked, as you started your own, let's say you have experience of your own startup, you ran your own startup for 3 years, you're as good as an MBA because you know how a business runs. But it's always nice, if you can get a good degree, nothing wrong. And all of you are very young. See, one of the things about India, and about Indians, I'm also Indian, is that, we want to get our degrees very fast, No, don't worry. The world is there for you. You have a career of 50, 60 years ahead. Let's say you spend 3 years doing your CFA first. You're 23 years old, you finish your CFA. After that, you go and work, whatever work you do. You work in a startup, you work in a family office, you do some internship somewhere. At the age of 27, you go and do your MBA. Nothing wrong with that. You don't have to say कि मुझे MBA जाना है, अभी जाना है, अभी जाना है. You can go at the age of 34 even, 38, 40. The world is there for you. Nothing is running away from you. So, in a nutshell, yes, it's good to have those additional degrees, is my view.
Perfect. So that was very inspirational. And if it's of any inspiration to you guys, I did my MBA at the age of 33 and my CFA at 40. So if that's of any inspiration to anybody here.
I did my CFA very late. I started at 49, finished at 52.
Wow. That's
very late, very, very late. But the Indian CFAs are very good. Huh? I'm sure everybody finishes it off in their 20s. They're very nice in our Indian CFAs.
Great. So again, this is a question from Sachit Gaudi. Of course, Mr. Arvind Mathur has given us a lot of excitement about the jobs available in financial consultants, financial educators, auditors, forensic audits, asset managers, regulators. But the biggies that he mentioned are pension funds and insurance. So the question from Sachit Gaudi is, what is the portfolio allocation of pension funds and insurance funds today? And how does it change in 5 years from today?
Okay, so a typical pension fund, okay, see, different pension funds have different investment strategies and investment allocations. So from my days, I was part of the management of the Asian Development Bank Pension Fund, which was $1 billion pension fund, which is nowadays not a large pension fund. But the point is, a pension fund has to be there to pay pensions. So the amount of risk a pension fund can take is limited, and therefore they need to diversify their portfolio. So a pension fund might say different allocators might have different mentalities. So let's say you start with, I'm going to have 90% I hate equity. I don't want to take any risk with equity. I'm going to have put 90% of my pension fund into fixed income. 10% maybe into some other asset classes, real estate, whatever. Now, what's the problem with that? Yes, looks very safe, but fixed income can also produce losses. We all know that. Not only can fixed income produce losses, today's environment, interest rates are ridiculously low. So you have to shift. A pension fund allocator has to allocate more to equities because interest rates are so low. going forward 5 years, you asked. So just to quickly finish the asset allocation part and then going 5 years ahead. So the asset allocation would typically be, say 5% private equity, 30% equities. So no, in today's world, today's day and age, maybe 40% equity, listed equity, maybe in different parts of the world or within your own country. Some real estate, maybe 10% real estate. Rest could be fixed income. So it would vary from pension fund to pension fund and their risk appetite and their need for liquidity. Remember, private equity is an illiquid asset class. As I mentioned earlier, private equity is an investment in unlisted shares. So a pension fund needs to pay pensions. It must have some liquidity. So they can't put 100% into private equity, but it's a pretty illiquid asset class. Real estate is also illiquid. Because these are illiquid asset classes, the amount that will be in these asset classes will not be more than 5 or 10% most of the time. But university endowments are different. University endowments have a totally different, obligation. They just need the obligation to run the university for 300 years. That's all. They can do with more illiquid investments, but not a pension fund. So, so different allocators vary. Their allocations are different, and they have a strategic asset allocation, and then they have a tactical asset allocation depending on the conditions at a given point in time. Now, let's look into the future. In the future, let's say 5 years, right? You said 5 years. Nobody knows what's going to happen in 5 years, but we have to make a decision, right? Karna hai, decision karna hai humko. What is that decision? Today, you will go much more into equities, simply because fixed income is yielding very low return. It's negative. It's a negative return in many markets of the world. Even in India, fixed income is giving very low returns. So this will persist. This situation is likely to persist for a number of years. So I would say that, to answer your question, that would be my one single comment. The second comment I would make is that venture capital has really made its mark. And in a country like India, there'll be some more allocation to venture capital and private equity. Doesn't mean it's going to be like 15%. No, not at all. But it's going to be a little higher. If somebody's doing zero venture capital and private equity, they will start probably doing 2%. If somebody is doing 2%, he'll probably start doing 5%. Of course, it depends on the portfolio performance, what the experience is. I hope that gives you some idea.
So Rajni, how much time do we have?
We can go with one last question.
Okay, so there are a host of questions. There must be at least 40 to 50 questions that I'm not able to take. My apologies to the audience. I think, Rajni, we should definitely have Mr. Arvind Mathur again, because there is a huge amount of appetite for answering the questions. So there are some very specific questions that have been asked, which are very personal questions. So I will not take them up here. So I will just ask one last question, which is actually a follow-up question on the previous question itself, in terms of, do the regulators also intervene in the allocation, and should they really intervene in the allocation of pension funds?
So you're asking about pension funds. My answer is that in India, the answer is yes. There's the Provident Fund regulations has mandated, how the assets are allocated and what assets are eligible. So to that extent, yes. Offhand, I don't know what percentages the government has mandated, but the answer is yes. There is government regulation of that, both for pension funds and insurance companies. And insurance companies' portfolio allocation has to comply with the guidelines of IRDA.
So great. This has been a very, very, of course, it's like mining a gold mine and just picking one nugget and going away. That's been our experience today. There were huge amount of interesting concepts like SPACs. We can do a complete session on SPACs, I'm sure. Industrial warehousing, investments. And I think the biggest takeaway for this session, for me at least, is for the participants is, like Mr. Arvind Mathur rightly said, don't just look at being a part of the GP. There are various other things like LPs, portfolio companies, be a participant of the ecosystem. There are placement agencies, consultants, bankers, valuers. There is a host of opportunities out there. And the ecosystem has to develop, while the opportunities directly into a private equity firm may be few and far between. The entire ecosystem is something that all of us will definitely have opportunities in.
Yeah, but at the same time, I do want to say that, there are opportunities in private equity funds also for all of you. There'll be hundreds and hundreds of PE funds coming. You may set up your own fund.
Very inspirational. And with that note, since the topic was private equity and venture capital, so it's been a great session. So any last words you'd like to say, Mr. Arvind, on the session? And
no, the only message I have is that, look, there is no hurry. People should build their skills, get their qualifications, work sincerely, work hard, be aware of the trends, and go for it. This is a great opportunity for you, all of you.
So on that note, I thank everybody for coming in. I thank Mr. Arvind Mathur for being here, and also to CFA Society and CFA Institute for giving us this opportunity for conducting this session. And over to you, Rajni.